Hi everyone, it's Evan from the Trade Risk, Wednesday, March 4th, here with some market analysis and some trade ideas for the week going forward. So we'll kick it off with the SPY, and you can see we had some follow through to yesterday's volatile session. The indices were red yesterday. They closed off the lows, and you can see today we gapped lower, and we sort of continued this small pullback that we basically started yesterday. Now, take a look at yesterday's candle. We're looking at the S&P 500 here. You can see the bears drove us down to right around 210 on the dot, and then we saw a rally back into the close, and we closed just a little under from where we opened on the day. Today we gapped down just above the lows. We drove lower, tested 209 on the dot, and then we drove higher, closed red on the day. But again, you can see that both of these sessions, we've started off just kind of probing lower, shaking out all the weak longs, and then the selling sort of just dissipates, and the bulls step in and they buy this market. Now that can continue for a long time. That can, we can continue to pull back here, but you can see that there is a fight, underlying bid under this market. Now the breakout that we've seen across all of the indices, in the month of February is still very much intact, right? 206. I mean, really, 208 is the breakout level to be mindful of. But we found support today right at 209, right where you would expect support to be, right where you expect the bulls to kind of show up, which is this several day kind of rest that we put in here, grinding on top of 209, where bulls kind of stepped in and bought the market. So it's interesting, we had a very, a pretty powerful bounce off of support. So we might need some more time to, to digest sideways, or we could just V-shape and continue higher, gap up tomorrow, and before you know it, we could be challenging these highs again. The bottom line is we're still in an uptrend, and we're still above all of the fast-moving averages, and support is still being respected, right? 209 was respected on the first test, so we'll have to keep stay measured and see how we move going forward. Take a look at like the IWM, for example. It's down slightly again. A cleaner kind of rising channel here that was snapped. Was tested yesterday. The bulls saved it, and then we gapped down lower out to the downside of this channel today. But you can see we did still drive higher and close near the highs of the day. So we'll have to see what tomorrow brings. Can we get back above 123, or do we need to retest the lows again or go sideways here? Same thing for the Qs, right? Some very clean support right around 108. Temporarily we're below it today, but we did close near the highs of the day, indicating, just look at today's candle, look at yesterday's candle, look at the tails on the bottom there, so you can see again the dip buyers are making themselves known. Let's look at some other markets. TLT continues to stay pretty weak here. Perhaps it's going to start basing out, trying to hold this 126 level and maybe go sideways a bit. The fast moving averages are curling down still, and it's still struggling to kind of stay itself afloat. It was green on the day, but it's still hanging on the lows here. So I think this 126 level is pretty actionable. Keep that level on watch. Oil, USO. Now, I actually did get long oil today. I got long it, basically above this 1875. If you go on a shorter time frame, you can see there's a cluster of resistance right around here, 1860, 1870, this zone here, and I like that we cleared kind of definitively above it, and we closed on the highs, nice strong, almost up 3% today. I won't let this take out today's lows, so my stop is pretty tight on this, and I'm looking just to see if we can get continuation towards the top of this range. It's still, in my opinion, a damaged long-term chart. It's still stuck in this rectangle, this range here, and I would expect overhead supply to kick in right around this $20. So I'm looking for a trade to the top of this range essentially, and then feel it out to see if it has more fuel in the tank, or if it's needs to rest there, or it's just going to continue to chop around in this range. So a tight stop, pretty calculated. Showed some strength, and we'll see what we get out of it. Natural gas. This one still staying a little weak. Pretty clear ranges here. I mean, 1510, 1360 or so. This has seemed to be support over the past few days. You could see price kind of trying to stabilize here. We saw price stabilize here back in the beginning of February as well. We were temporarily below it with just these few days here, but you can see 1360 about, and then 1510 on the top end of the range. So I like the sideways action. It is shaping up to be something of a breakout trade that I would be interested in. So I'm going to keep it on watch, and we'll see what happens. Gold, the metals have continued to slide. Gold's a mess. I mean, we've talked about this open gap that's sort of this, almost an island reversal here that's still just kind of controlling price to the downside. It's a really sloppy pattern, just not very interesting. But, it just needs to carve out a bottom or, sort of do something here. It's just not that appealing to me. Silver, still pretty messy. It's a little cleaner. I think the levels are a little more actionable. Again, $15.90, call it $16, I think is an important level for the bulls to reclaim to start making this chart a little more constructive. Otherwise, again, it's still just a mess. Needs to prove itself, and I'm not that interested. Now, let's look at some market sectors here. The biotech index, IBB, this has been continues to just be a monster. This is where all the strength, the leadership is coming from in this market. It was nicely green today, up almost 1%, and even tried just breaking out of this high level range that it's been in, which just goes to show you the strength on a day like today. So definitely a lot of the names in this sector keeping the market up here. There's a bid in a lot of these names. Continues to be very strong. So again, above today's highs, essentially, I think you still, you can see some nice continuation. You might have some nice momentum, little mini breakout trade there if you can start to get above today's highs. But again, I think this is where you want to look. Another sector that was pretty hot today was the healthcare sector, up almost 0.5% today, while most others were red. So this one continues to look pretty nice here. Look at a weekly chart, broke out 2 weeks ago from the 71.25 level, and continues to chug ahead nicely. And on the downside, the industrial, these guys kind of got broken back below 57.50, which were the prior highs back in the end of 2014 here. You can see we kind of double top there. In February we got back above it, and now we're breaking back below. So some laggards on the day there. Now let's get into some individual names. Apple continues to, continues to be very healthy, just consolidating, really. It's had a marvelous run all the way from 106, this recent leg, and now it's taking some time in digesting. So you can see it's trying to coil up kind of tight here. 128 seems to be the immediate support, and you got sort of this trend line coming down. You got, $130 basically on the upside is the level you'd want to see the bulls break out of. So Apple seems to be getting very constrained in this level here. So you probably want to keep this on watch. The next couple days you might see a resolve here, but Apple continues to show just a lot of strength. Again, fast moving averages are still up there. Prices still above most of those fast moving averages. So see what happens with Apple. Looks like we could get some resolve pretty soon. Google has been on fire above 542. This thing has just been a rocket ship. It's been a tough one too. I mean, it didn't give you much time to get in on this last leg, and it's just been relentlessly charging higher. So it's made it extremely difficult to jump on board if you missed. If you missed it inside of here, perhaps in here, it's been a real tough one. So Google looks great. Take a look at a weekly chart, kind of smooths out the price here. It's been in a large holding pattern, really. 600 is the top end of that. That has been that's the all-time highs in Google is just above $600. So perhaps it's destiny to retest these levels up here at $600. Sure seems like it has the pent-up fuel to get up there. So let's just see what happens. Tough to chase. If you're in it, congratulations. Continue to trail. Otherwise, I think it's a pretty tough trade to get involved in right now. Amazon continues to work higher as well. Kind of got this rising channel that it's just been moving through since earnings. Has not stopped. Hasn't really pulled back at all. Another name that's been real difficult to get involved with if you didn't already, if you weren't already in it prior to earnings, or if you didn't jump in it, really quick on this first week of action. So Amazon is down today, still hanging real healthy, needs a rest, tough to chase. We'll see what we get out of it. Netflix. So this one broke. This one, got all the way up to basically retesting all-time highs at 484, 485, and it's pulled back a little bit. I know it was in the news today for some headlines. I'm not sure what they were exactly, but it did break. You had a little bit of a short signal here. It did break some of this support in here right around 472, 473. You saw price test down pretty hard, but then the bulls did step in and rally it off the lows. So could be interesting. I mean, it is below this resistance level. You want to see it get back above today's highs, essentially 473. Otherwise, perhaps you do get some more of a pullback in Netflix. But again, chart just generally needs some rest, and it's tough to get involved in that one as well. Tesla, 193 to 220, same range. I don't see too much with it. It's just really tough to get involved. Take a look at a weekly chart. You can see what's kind of going on here. Maybe some type of head and shoulders pattern in the making. But again, I think you just got clear support down here. You got resistance, and I think it just needs some more time. Facebook's one I got involved in today. Got involved in it earlier in the day and had a nice strong close. I like the way, I like the move it had today, of course. All the way back up to the top end here, $81. I do think this $81, can definitely still have a little bit of overhead supply to contend with around here, but I think the heavy lifting really got done right above 78.50, and then above this $80 level, above this kind of cluster here, was really what I want to see it get above, and it did today throughout intraday. So I like Facebook. Weekly chart shows a very nice picture here. It's been consolidating for what seems like forever, and it would be nice to have Facebook back in play on some type of trending new leg higher. So we'll see what we get. Continuation tomorrow is what I'm looking for. Relatively tight stop on it, but performed pretty nicely today given the market environment. Now Twitter also ended up slightly red, but it was a good recovery by the bulls given where it was earlier in the day, basically down a little over 2%. And you can see Twitter closed right above this resistance, 47.50, right? This was resistance here right after earnings, and then it was support just the next week after as they kind of bounced above 47.50 or so, failed at $50, came back, broke through it, and we're just hanging out here. So it's basically, long story short, it's consolidation. It's healthy. This gap is still intact. I think the lows of today are now very important. I think 46.50, which is basically the lows from here. The stakes are basically raised at this level, so you'd want to see the bulls defend this open gap and price above $46. I think will be important going forward. Alibaba had a massive run today. Yesterday looked horrible. Made new all-time lows yesterday, and it's something that I for one wouldn't want to be involved in, and I think you really just kind of shook out a lot of what longs were left from maybe in here buying, and possibly really sucked in a lot of shorts, making new all-time lows, and then today just completely reversed it on them, engulfed yesterday's bar basically, and closed on the highs. Now it's certainly impressive. 5% up days, no joke in today's tape. So I think it was impressive. Moving averages are still down. It's still tough to chase this. I mean, it doesn't interest me on getting long this right now. Doesn't mean it can't see continuation, but you're still in a damaged chart. I'd like to see this move sideways, maybe 2 or 3 days of some tight sideways action, and then a break above $85.50 or $86. I think that sets up a nice move for my type of style. That's what I'd be looking for. But if you're short, I think today was a potent day where you need to kind of step aside. I think starting a long position's fine, depending on what your style is, but today definitely hats off to the bulls there. And GoPro, much of the same, up almost 7% today. Same type of boat, right? not quite all-time lows. I think these 37.50, this was certainly a level I was eyeing. Maybe a lot of people were eyeing this to maybe get a retest, and perhaps maybe we won't get a retest. Maybe we're going to just kind of put in a slightly higher low here, taking a look at a weekly chart. You know, maybe this will be a slightly higher low in the grand scheme of things, but it's too early to say. Still a damaged chart. Moving averages coming down. $43 is a resistance level. I think you got resistance up here, so you got a lot of work to do if you're a bull, but again, it's a good start. Now, let's look at some setups, trade ideas going forward. eBay's the first one. This is the weekly chart, monster consolidation for 2 years. And we're breaking out of it now. 57.50 more or less is the breakout level. We're basing above that now. That's really healthy action. So when you get a nice, you know, smaller near-term base above a longer-term breakout, that's pretty healthy action. So I think above today's high, 50, you know, you call it $59, $58.80, something like that. I think that could be your entry into a new leg higher, perhaps the start of, you know, a real longer term leg that could be real sustainable in eBay. So keep this one on watch. This one looks pretty good going forward. Next I have XLRN, biotech name. We'll stick with the theme of the leadership here. 41.80. This level, $42, basically above today's highs. I think you get some, you get a leg higher here. Take a look at a weekly chart. Recent, you know, it's not a very old issue. Had a nice leg higher, came down, and it's, you know, it's been finding resistance right around this $42 level for several months now, and it's challenging it again now. So if we can get above there, I think that one looks good for some more upside. PPG, been talking about this one for a while, still just playing around in this box. 232, 237, what a candle today. Really tested the upside and then faded halfway. Still closed green, which is constructive, but you really got to see it just get above 237.50 or so for some sustainable move of momentum. VAR is another one. Been talking about this one for a little while too. $94. I think if it can get a little bit higher here, I think this one could be interesting. Nice, you know, nice base breakout, nice base. Looking for that breakout again. So I think above $94 could be interesting. Finally, Box. This one hasn't really done a whole lot to excite me since its IPO. You know, had that nice exuberant pop on the IPO. Headed, you know, came down. Pop, now it's going sideways a little bit, so I like the sideways action. It's getting real tight here. I think above 1920 or so I think could be an interesting level to get long, nice and calculated. Look for some more upside. First level of overhead supply right around $21, and then of course you get the immediate IPOs up here, highs around 24. So keep that one on watch. I think that could be interesting. And then a few short setups. Lazy Boy, this one, you know, was basically in this channel higher here. Snapped it in February while the market was heading higher. Snapped lower in February, and then it's been just really kind of tight here on the lows. So very suspect of this. I think a below 24.80 I think could be a pretty nice short setup. Just given the leg down it's had, no real bounce. If it could break below, you know, the cluster of lows here above 24, down below 24.80, I think you'd have a pretty nice short setup. Similar kind of setup here is Dorm, D-O-R-M. This one broke lower in February as the market was heading higher, and it's been consolidating real tight, moving averages pointing down. Hasn't really been able to come up with a bounce, and you get a lot of overhead supply over here. So I think below $44, I think you have a pretty interesting short setup on your hands. And finally is CMG. This one, this was a setup I was looking at yesterday. It triggered today, but the bulls are still present in this. You can see closed red on the day, but they did drive price up and closed basically flat from where it opened. So you know, it's still stuck in this longer term range. 650 is long-term support in this, more or less, and perhaps it will eventually get there, but it's might be a tricky one to get on board short, but I do like it as it's below, you know, 673 or so, below this cluster of sort of closing prints and topping tails here, I think is pretty interesting. So that's all I have for today. I hope you enjoyed the video. As always, if you'd like the videos, please do subscribe, bottom left hand corner. And thanks for watching. I'll catch you next time.